Yeah, so here's an example. Let's talk about this example. So it's an extract from business accounting. That is Franco. I'll be committing a crime if I don't mention the source of this diagram. That is Franco one. Right. So in this diagram, let's start with the position number one. Right. So um the manufacturer. We have started with the manufacturer. Okay. So the manufacturer has sold a table. Okay. Sold a table. Sold a table uh, to a retailer for $100 or 100 pounds. Okay. So uh, this table is taxable under the VAT rules. So he has added VAT at a rate of VAT at a rate of 17.5%. So what's the VAT? It will be 100 times 0.175. Okay. So what's the total selling price for this manufacturer? It will be 117 pounds, 117.5 pounds. So this manufacturer sells to a retailer, sells to a retailer. Okay. So this retailer, what the retailer will do, it will say, okay, I'm selling this table at 100 plus this 100 plus 20 pounds, which is my fee. Okay. So, so this retailer will sell, um, or before we go to this one, okay, before we go okay, the retailer now has bought at 117.5. Okay. So what will happen is um the retailer will pay 117, and then the manufacturer will pay to IRA, or in our case, Malawi Revenue Authority, will be paid how much? 17.5. That's the amount which will go to the tax collecting body. Now, the retailer will say, okay, out of the 100, out of the 100, I'll add my profit, which is 20. So, and then on top of the 100, I'll charge VAT to my customers. So VAT at 17% will be 120 times 0.175. And the total selling price for this retailer will be, if I add, it will be 141 pounds. So the customer here, the ultimate consumer of these goods we're selling here, will pay how much? 141. Okay. So the table will be sold for 141, and then the customer will pay the retailer 141. Okay. Now, the retailer now. Okay. So, um, out of the 141, uh, the the manufacturer, okay, the manufacturer or the retailer has already paid. 17.5, while the customer has paid 21 as VAT. What's the difference between 21 and 17.5 is what? Is 3.5. So eventually, the retailer will pay 3.5 to the IRA, or the Malawi Revenue Authority. At the end of the day, this tax, which the final customer has paid, has been paid to what? To the Revenue Authority. Okay, if you add these two, you find that the customer has paid the full $21 or pounds as VAT. So it's the final consumer who pays the what? Who pays the value added tax or the sales tax. Had it been that the retailer did not want to sell these goods to customers, it could have ended here. The result could have been only the manufacturer paying to the uh, IRA or MRA, the VAT involved. So that's how I can uh, elaborate on the VAT, right? So there's another way, or not another way, there is a VAT is in the grouping of indirect taxes. Why is it called indirect tax? It is called indirect tax because um, the consumer is paying tax unknowingly. The consumer does not know that they are paying tax. Of course, when I go to the supermarket, I receive the receipt. It shows the breakdown of the what? Of how much tax I'm paying. But when the retailer is selling that item to me, I'll just say, oh, he's selling it at 141 pounds. Okay, this 141 pounds includes the VAT. So I'm unknowingly paying the value added tax. So it is the indirect tax because it is not being paid directly by the consumer. I'm not directly paying the what? I'm not directly paying the tax. It is the retailer and the manufacturers who are paying what? Are paying these taxes on my behalf. Thank you.